So hi and welcome to the April edition of First Friday. And the guest today is DT Group. We've got Lucy and Jack from the DT Group. And as it's April, we thought it was topical and seasonal to talk about tax and what franchisors need to do in effect before April, but now we're here, need to be doing, hopefully, are doing some of it, all of it, most of it, but if not, we'll find out. So I'm going to pass over to Lucy, who I think is taking the floor to lead us through the next part of the session today. And Jack's also on the call to answer any questions that anyone has about anything on the technical side as well. So hi Lucy, hi Jack. Lucy, the floor is yours.
Hi, yeah, thank you so much for having me. I will just share my screen, so please let me know if you can see it okay. Yeah, amazing. So quick introduction. Hi, as we say, I'm Lucy. I'm the head of client services from DT Group. What that kind of means is I do all sorts of things, including wedding webinars like this one. So hopefully we can help in any areas that are topical. So right now we're talking making tax digital. So first of all, what is making tax digital and who does it apply to? So making tax digital is impacting landlords and self-employed individuals. And what is happening is they actually need to now submit full quarterly updates and a final declaration. So the final declaration is instead of the self-assessment at the end of the year. And the new change basically is the full quarterly submissions. So this should help HMRC basically understand your finances earlier than leaving it to the very end of the year. For those that making tax digital applies to, HMRC will no longer be providing their filing service, and you will have to have recognised software. So for example, we use Xero and QuickBooks, so you will have to pull out one of those. At the moment, Xero and QuickBooks do offer different prices, and the simple license is the version in Xero you'll need, and I think it's called Essentials in QuickBooks. And they're around £7 ex VAT. So they are the lowest tier package is what you would need, and therefore it is still fairly cheap. But we appreciate, obviously, it does increase some costs that you wouldn't have before. This, as I say, is self-employed and landlords. So if you are a partnership or an LLP, you are exempt, but we say for now, because let's face it, it's all changing. So it will probably impact everyone soon enough. When it comes to the mandatory key dates, things that you want to be aware of, if you have qualifying income of 50,000 that you submitted on your self-assessment in 24-25, you will have to therefore be making tax digital compliant as of now. So as of April 2026. And then if you had income that is above 30,000 that you submit for this tax year that's just closed, so 25-26, you will have to be compliant from April 27. And if you're above 20,000, then you will have to be making tax digital compliant from April 28. So at the moment, those under that threshold are not needing to be making tax digital. But again, we wouldn't be surprised if this changes in the future. So if making tax digital applies to you, what you need to bear in mind is Q1 is your filing period for the 6th of April to the 5th of July. This is the default period. You can request ahead of filing your first submission. You can request to be filing dates 1st of April to the 30th of June or 31st of June, if I get that wrong. But at the moment, the default is the 6th. So you will, as I say, have to request that change. And all filing is required to be done for Q1 by the 7th of August. And then Q2, that is the year-to-date period. So that is the 6th of April to the 5th of October. So for example, you may find that you had an error in Q1 or you didn't have an invoice that you should have submitted for Q1. That's not anything to be worried about. You can just update that within Q2. That is due by the 7th of November. Q3 is again year to date, so that's 6th of April to the 5th of January 27, and that is due by the 7th of February. And then Q4 is year to date, so that's then the whole year, so that is the 6th of April 26 to the 5th of April 27. That is due by the 7th of May 2027. And then what the final declaration is everything again, so your whole year. But at that point, if you haven't done your accounting adjustments along the way, you can do them only in the final declaration and at Q4 point. So you can do all those adjustments and mop-ups at that point. Alternatively, you can do the adjustments along the way, but it's an option whether you do it along the way or at the very end. So making tax digital requirements. If it applies to you, you need to sign up. So you need to sign up with HMRC, and that's just notifying them that you agree, basically, that it does comply to you, and you'll then get confirmation that you now have the software access to be able to connect back to the accounting software to upload to HMRC. And all accountants are able to help you with this. So again, this is something that we can touch on. We can help sign you up. We can help get you connected. And then again, Making Tax Digital is all about maintaining digital records. So now you will be using software, so you will have all your sales and your expenses in one area, and again, the accounting software. And this will actually show in categories. So for example, your sales might be just under sales, but you'll have motor vehicles, and there's some really key tax categories that you'll start to use as well. You might be familiar with this if you're not using software and you're just using Excel spreadsheets anyway, but this becomes really defined categories when you start using the accounting software for this reason. And again, it's just, as we said before, you have to then do submissions, so quarterly, and then have your final declaration at the end as well. So the quarterly updates, I've kind of alluded to slightly, but this is including everything, so your income and your expenses. But when you're doing the quarterly updates, you don't have to do your tax or accounting adjustments along the way. You can leave that till the very end of the year. There's no problem which way around you do it, but be consistent the whole way through is what I would recommend. And as I said, income and expense categories will start being, you'll start getting used to which ones to use for your type of business. And HMRC, basically, they're not going to have your whole bank transactions. It's not like you're going to submit all of that and they see everything ins and outs wise. It will be that high level category. So again, it will be, for example, my motor vehicles are £600 for the year. They're not going to see where you're spending your money because I know sometimes privacy is quite an important thing. Some of the key benefits we are seeing, this will actually allow you to scale your business because you'll be able to make decisions in real time. You'll be able to look at how am I doing right now rather than waiting for the next January to understand how your business actually worked and how you can improve things. Through accounting software, there's automations. So again, we've got AI coming into a lot of these softwares, and that will help with bookkeeping and things like that to reduce the human error elements, I guess. And just the real-time insight is really key, I think, to benefiting everyone. And then, as I say, choosing the right software. So we typically use Xero and QuickBooks because we know that they're really good softwares to use. There are others out there, but you want to be really clear with what accounting software you go with. If you don't know, please speak to an accountant. Again, we're more than happy to have that conversation with you. But there are some softwares that's classed as a bridging software, and so they don't do everything that you actually need. So you would then potentially need two. So do have a look or contact us if you need some help. But ultimately, what you're looking for when it comes to the right software is that it's a cloud-based system. It allows you to hold your digital record keeping. It connects with HMRC, so your online filing is possible. One of the benefits is you can have app integration. So if you have another invoicing software, you could potentially pull all those invoices directly into Xero. You don't have to recreate them or anything. And then you can complete your bookkeeping or reconciliation using that. So that can be a really powerful tool because then you can, on your report, see exactly who owes you money rather than maybe only going by adding up every invoice individually. And also there's automations through software as well. So I've got a couple of slides now that just really goes into that point of, does it apply to me? So hopefully this will really help clarify some things for everyone on the call. I am a limited company, so I am a director of a limited company. That is all I have and do. Does Making Tax Digital apply to me? even though my income is above 50,000 in the limited company? No, limited companies does not class as qualifying income, and therefore if you have dividends, direct loan repayment, benefit in kind, anything like that personally getting from a limited company, this does not apply to you at all. I am only an employed individual, so I have a P60, P45 potentially, things like that. It again does not apply to you even if your income is above 50,000 because you are taxed already on a monthly basis. So making tax digital for income tax does not apply to you. I'm an LLP, so I have profit shares that go above 50,000. Does it apply to me? Well, although you have profit shares of above 50,000 for you personally, this is not actually classed as qualifying income. So again, at the moment, this does not apply for Making Tax Digital, but this is where we are seeing the possibility it will apply some point in the future. This year, it won't, but years to come, it is likely. So watch this space, I guess. Partnership, again, very similar to the LLP structure. It does not class as qualifying income, therefore it does not apply to you at this stage. But again, watch this space because we wouldn't be surprised if it changes. Okay, what if I have multiple businesses? So for example, one of my businesses makes 20,000, the other one makes 31,000. Does it apply to me? Well, yes, because although business-wise you have under 50,000, because you are classed as an individual to HMRC, both of those businesses are sole trade businesses. Therefore, as a total, you're 51,000 income. You exceed the threshold. Making Tax Digital applies to you now. If you have a sole trade business and a property business that together exceed 50,000, again, similar thing, it will apply to you as long as that property business is considered a sole trade business rather than a limited company business. So again, just really small things to bear in mind. And therefore, as we've already said before, if you're a sole trader or self-employed, it will apply to you if you're above 50,000 for this tax year. I've just got some couple of work examples. Hopefully this really reiterates what I've been saying. But basically, if you're client one and you've got profit share income of 10,000, and as I've said, it's income, it's not profit, it is classed on your income of 50,000. So profit share income, 10,000, self-employment earnings or income of 51,000, and employment income of 9,000. So my total earnings are 70,000 as income. Well, unfortunately, because the self-employed element is above 50,000, Making Tax Digital applies to client one as of April 2026. But for client two, because they've got profit share income of 10,000, self-employment income of 20,000, and employment income of 40, they've still got the same 70,000 because it's distributed slightly differently, and the self-employed element is under the 50,000. Making Tax Digital does not apply to them yet, but it is likely to in April 28. So again, even if it doesn't apply to you today, keep an eye on it because it might apply to you at some point. There is an exemption process. So for example, you might have put through an allowance last year, or you had something that meant that it doesn't apply to you for temporary reasons. That again, there's temporary and there's permanent reasons. So permanent reasons at the moment, you're always under 20,000, so that's fine. But maybe there was a relief that you put through the business last year, so therefore it's temporarily not required for you. However, next year it might be required. So again, have a conversation with your accountant, speak to us. Absolutely, we'll look into it and stuff like that for you. And alternatively, you can also ring HMRC. They have a list, even though they've contacted just about everyone, they actually have a list of who specifically they expect to be signed up for Making Tax Digital. So if you're on that list, they'll be able to confirm for you. It should take a 5-minute conversation, but you know, the phone lines take about 30 minutes sometimes to get through. But yes, as I say, if you need to put through an exemption, so for example, your business might not be trading next year, and so maybe you're retiring. So although you qualify, you technically don't next year. You can again put in a letter, or you can ring HMRC and you can start applying now for that. If you think, okay, well, I'm going to go over the threshold, I'll do it for this year, but I don't need to be signed up for next year, you can start applying for those in summer 26. But you can't apply for that until summer. So you can't do that now at the moment. And anyone who's an authorised agent or a friend or family who is authorised can also put in that request for you. And as I say, it's a phone call or a letter to HMRC. And then the next steps, really. So as I've said before, if you have any questions, if you would like any more information from us, we've got a couple of packs that I've sent to Julie. I'm sure they'll get circulated. But if you have any questions, feel free to contact us. Our email is inquiries@team-dt.com. And if you think this applies to you today, please make sure you sign up for Making Tax Digital ASAP. And if you want to apply for the 1st of April, you need to do that before you put in your first quarterly submission. So again, make sure you get that done sooner rather than later. You then, once you've signed up, so if you sign up, you'll then need to get your agent or your accountant access. So that again is quite a simple process. Register for accounting software, and yeah, away you go really with Making Tax Digital. And that's me. So I don't know, do we do questions now, Julie, or at the very end?
Yeah. If you can take the screen off, Lucy, and we'll open up questions. And I have the first very basic question, which is in terms of the 50k threshold.
Mm-hmm.
Does that relate to business income, i.e. sales, or does it relate to personal income, i.e. what an individual takes out of the business personally?
So if you're self-employed, you're officially classed as those sales are technically your income personally. And so technically it's the same thing. It's not classed as the profit. So it's not classed as the physical cash that you get. It is, I literally made sales of 10,000 today, and therefore 10,000 is marked against your name for income. And so, yeah, if you get to 50,000 at that point, then it will be qualifying for you.
So it's basically 50k of annual sales turnover, irrespective of what's left in the bottom after overhead. So again, it can apply to sole traders, limited companies who potentially aren't VAT registered. Because
sole traders, yes, not limited companies. Limited companies are not impacted by this.
Right.
But yes, if you're a sole trader and your VAT doesn't apply to you, but this might, because the VAT threshold is 90,000, but the Making Tax Digital is 50. So yes.
So it's really mainly targeted towards sole traders, because partnerships, limited companies, LLPs. Jack, if you want to unmute, I'm just asking my basic questions and own it to the.
No, that's absolutely correct. I think the rollout initially is very much sole traders. So if we've got kind of franchisors on the call, what we're kind of considering here is very likely they've got a limited company structure. They're okay themselves, but certainly looking at their wider franchise network, if you've got anyone operating in that kind of as a sole trade structure, this will potentially qualify. And that will be kind of within the next 3 years, is very likely everyone's going to be qualifying and making sure that they have to do these quarterly submissions. So it's really about kind of now, you can't just do it once a year on the 30th of January, getting into those good habits. I think kind of everything that we try to set those expectations is around looking forwards, not looking backwards, utilizing accounting software, regularly checking those numbers. Unfortunately, Making Tax Digital is really just kind of driving that forwards. If we don't kind of submit the quarterly records and information on time, that's where then kind of penalties start coming into play. And also, I've got kind of one for you, Lucy. Like it would be worth explaining as well. So if a sole trade franchisee had a franchise territory, but they also did some additional self-employed teaching or had some self-employed revenue on the side, what would be the impacts in that case, Lucy?
Yeah, of course. Sorry, I was just writing it down because my brain works better when I reread it sometimes. So 100%, unfortunately, if your sole trade, so for example, let's say your sole trade franchise network makes you 30,000 income, and your self-employed earnings are 10,000, that's okay. Either way, you're under the threshold. However, if we actually say, again, just nice numbers, your sole trade franchise company makes business makes 30,000 because that's sole trade, and you've got self-employed earnings of 21, you're now over the 50. So unfortunately, because you as an individual are over 50,000, you will be needing to making tax digital at the moment, unfortunately. There are questions with the software as to whether you then have to have 2 licenses or not for the 2 different businesses. Some clients of ours are opting to have 2, whether they need to or not, because they like to have their businesses separate. You know, the self-employed element is just me, but maybe my franchise network is available for other junior members to be able to access. So we are obviously looking into how best to tailor that. But again, we have been told by the software providers that you should be able to have just the one for both if you wanted. But 100%, unfortunately, you would be making tax digital.
Okay, Sarah, you had your hand up, but you've taken it down. Does that mean the question was answered, or?
It was mostly answered. It was about if you have different types of sole trader income, how that's handled. I suppose it might depend on how you've previously reported it on your self-assessment tax return.
So if they're, again, if they are both self-assessments, or potentially more than 2, if you do go over the 50,000, it will be classed as making tax digital, whether you've called it one business, whether you've called it 2, and effectively 3 or not. You know,
I understand that. It's about whether you have to split that income and do, as you say, 2 returns every quarter. Rather, so we are a tuition franchise, so we do have franchisees who operate Magic Cats franchises, but then might do science tuition as well. And it's how they actually treat, and let's say the combined turnover is over 50, it's how they treat that with, but you're saying it will be determined by their software if they're using Xero or QuickBooks?
Yeah, so in the past, basically what would happen is on the filing software, I don't know if you've ever seen HMRC's version, but you basically submit and say, this is my business, so this is the name of the business, this is roughly what that means I do, and then this is the income and expenses that relate to that. You would then have another section, which is then my second business. And so you would really clearly tell HMRC both businesses separately. And this is where, at the moment, the accounting providers are trying to figure out how best to make it possible that you only have the one software license with them, to obviously keep prices down, and therefore whether you can actually have it separated like that still on the accounting software, or whether you would end up saying, you know, I have income of, and it's really clearly split out for this one business, but then I'm going to just add the second business as a one-liner. Unfortunately, the softwares are still working on it, and we're in April. So I wish I could have given you better clarity on that right today. But yeah, unfortunately, they're still building and seeing what they can do.
But what's the
there's a shock.
Well, yeah, so that's it at the moment. If the accounting software allows you to do the 2 together, that is then the agreement with HMRC that you are allowed to just submit it, because at the end of the day, HMRC want to know that you're taxed on the right figure, and actually that your total income is correct and the total expenses are correct, rather than how you've received that money. So that is, yeah, unfortunately still being worked through at the moment.
Okay. So, Simon, you've had your hand a long time. Then I'll come to Kat, because Kat's got a hand raised.
Just a quick. So the personal allowance has got nothing to do with it, then, has it? I mean, it's not 50k after your personal allowance, because so it's 50k self-employed from all sources. So you could be a self-employed franchisee making 40 grand a year from your main business, but then all the stuff that you sell on Vinted, for example, brings another 10 or 12 grand a year. So then the 2 get lumped together and you become liable. Yeah, got it. Okay.
Yeah, because it's very clearly income as well. It's not about the profit. It's not about what you take home. It is very much, I have sold physically for 10, say 10,000.
Okay. Are we likely to see more franchise networks then encouraging their franchisees to go the limited company route as a result of this, do you think?
I wouldn't be surprised, but it always comes back to the different tax elements, because obviously from an individual perspective, you've got the personal allowance, but you don't benefit being a director from the, you get taxed immediately when you make that income and expenses. Whilst if you're a director, you can choose when you take that money out and therefore when you personally get taxed. So there is a lot to consider, but I would not be surprised if people start looking down that route of, would this be better structure for me?
And this doesn't replace the self-assessment. The self-assessment will still continue.
This does replace it, yeah. So
it does.
Yeah. So basically, you'll have the quarterly submissions. So we've got Q1 all the way through to Q4, and then what is called final declaration is basically the self-assessment. So it's all the self-assessment is now is going to include every 4 quarters plus any adjustments along the way. So for example, you have the working from home allowance. You might not want to put that through on a quarterly basis, so you'll make the adjustment at the year end. So that's probably the difference between your quarters versus final declaration.
Okay. So just to be clear then, because I'm a sole director of a company, but I still have to do my self-assessment every year because they want to know, how much I'm paying myself in dividends or anything like that. But so I don't come in scope of this because I'm a sole director of a limited company. It's only if I've got self-employed work. For example, if I hire myself out as a franchise consultant on a self-employed basis that isn't done through my limited company, then I would then be liable if my earnings are over 50,000 through that.
Yes, that's correct. Yeah. So the self-assessment route for limited companies stays the same. And again, if your self-assessment is below, at the moment, 30,000, then again, 50,000 for this year. Again, you can still do as you've done in the past. Yeah.
Okay.
Right. Thank you. Kat.
Thanks.
Hi, Kat.
Hi there. Sorry, I missed the first bit. I was on a call. But I can't actually entirely remember what my question was. Oh, that was it. Yeah, I think it was the business about if you've got 2 income streams, so you've got your franchisee income as a sole trader, you most likely would have to, how it works, whether or not you can have 2 companies under the same license. I say companies, sole trades under the same license, because you would need to report them separately, because the franchisor doesn't want the franchisee mixing up their sideline business in with their accounts for their franchisee business, so they would have to keep it separate. Whereas if this was just you had 2 random businesses and it was nothing to do with franchising, you may be able to coordinate them together.
So in terms of that, the reason why you still would potentially be able to do it is because this is a back page. So this isn't going to be on your, so if you're, for example, on Xero and you run your report, so you've got your P&L and your balance sheet, that 100%, as you say, is going to be your franchise business. But there's now going to be a tax page that basically summarizes everything that your report says, but you can there put adjustments in, and that won't filter through onto other pages in your Xero account. That will be just on that one page. So 100%, it would not muddy the waters for your other account. If people want to keep it separate, then obviously absolutely fine, they can. And there's no reason why they can't, other than obviously is a potential increase in price. But yeah, it does look like you should be able to do that and it not impact it.
Okay, thank you. Sarah?
That's my question.
Thanks, Kat.
Sorry. So let's take so my sister, for example, is a director of our franchise, and so could potentially receive dividend income, but as a sole trader operating workshops as a sort of franchisee herself, her turnover exceeds the 50,000. So you said it's replacing self-assessment, but if you've got income that is both sole trader income and employed income and dividend income and so on, how is that going to be handled at the end of the year?
Yeah, so again, in the softwares on this tax page, it will allow you to put in your P60, I get them confused, P60 or P45 information, and then any of those extras is all going to be on that tax page. Apologies, I should have probably thought to show you that example as well.
And so what's the tax page? Is that a page within Xero or QuickBooks or whatever?
Yeah, in Xero and QuickBooks, it literally is called, I think it's tax planning. But on that page, it will literally say your sales at the top, and then your different tax categories for your expenses. So again, motor vehicles and things like that. And then you'll also have other pages or other sections that go into the other types of incomes that you might have. So again, you wouldn't then have to do here's just my sole trade business element, and then, I'm going to do another self-assessment because I'm a director. You should be able to put the two together. But again, unfortunately, this is where Xero and QuickBooks are still a little bit behind with being able to show us exactly what they can and can't do.
And in theory, you'd only then put that information in on the final declaration. Right. Okay.
So yes, again, you could at a quarterly basis if you wanted, but officially you only have to on the final. Yes.
Okay. Thanks.
No worries.
Lucy, Jack, on a scale of 1 to 10, where 1 is not at all and 10 is absolutely, completely, how ready, prepared is the franchise sector for, making tax digital, basically?
Do you want me to answer this, Lucy? I would say 4 out of 10. I think kind of this is something that we've certainly been shouting quite loudly about it for a good few months now. Obviously, we've had to put a lot of work in behind the scenes, because not giving sole traders a bad name in any way, shape or form, but these are your typical kind of smaller self-employed one-man bands that are very much kind of in the day-to-day, week by week. For us, I would say the biggest challenge is certainly across the franchise sector is making sure that these changes that are coming is enforcing those good habits. And certainly for us, working closely with franchisors, everyone needs to be monthly bookkeeping complete. If you're not doing your monthly bookkeeping, at the very least, you don't know what's going on in your business. So if you're investing, you're spending time, this is for your future. Everyone buys a business, everyone has an exit strategy. It's really just trying to double down now on the good habits more than ever, that you can't escape this. If you don't want to do it, that's absolutely fine. Like, we've kind of really rolled out for us kind of self-employed business owners are like a 3-tier level. For us, kind of, this doesn't have to get really expensive and unmanageable. It is very much kind of that check and file process for us is going to look, our kind of middle tier, if the clients don't want to do it themselves, is around £25 a month. So to kind of put that into perspective, that's kind of for our check and file, make sure those quarterly submissions are being made. In terms of a little bit more kind of comprehensive, we do have an option that rather than just check and file, make sure everything's okay, click the button each quarter, we do have the option to do at the quarterly check and file stage, do the quarterly adjustments, the quarterly tax planning around that. So franchisees are really starting to get a true idea, kind of a bit of a bridge in the gap between kind of quarterly management accounts. But yeah, this is something that I think a lot of people are really going to start to do something about it around the 7th of August when that first submission is due, because we've been shouting about this, and we've been struggling to get clients to run them through, get them set up and go through that process. So I think kind of it is over the next few months, it's going to really start to kick off a little bit.
Okay, great. And then again, Jack, do you think this is going to spin out? We're talking about sole traders, but do you think inevitably it's going to spin out to limited companies, partnerships, LLPs?
Obviously, certainly for us, when you've got like a sole trade business owner, very much in the business, doesn't necessarily always have a significant amount of other sources of income. The sole trade, it is cheap, it's efficient to get underway and get in business. There's a big gap between self-employed sole trader and being a limited company. Obviously, it's that level up. Biggest thing being the limited liability. It's more expensive. You've got to file accounts at the end of the year. Obviously, with corporation tax rates changing over the past couple of years, so this sole trade versus limited company on pulling money out of business through tax efficiencies is very close in line with each other, since corporation tax going up to 25%. So it's all about kind of the good habits and understanding it case by case, really. Obviously, you've got a general partnership structure right now, avoids the being compliant for making tax digital income tax, because it's only eligible to the sole traders. And then it obviously allows a little bit more flexibility around profit distribution. But yeah, I think it's kind of, where are you at? If you are literally changing a business structure because you don't want to do a quarterly submission, does that feel quite right as well? Not really.
I think also just to add as well, something that hasn't been mentioned, and I must admit I don't like to say it too much to scare people, but part of the autumn budget is, sorry, I look like I'm really light
Sun
now.
shining.
Yeah, it's lovely, isn't it? Basically, there is a potential requirement that come 2029, we are having to actually start pushing people into using accounting software more generally. But again, this is just something that was in the autumn budget. I think typically there will be a Making Tax Digital requirement for all business structures. But what that looks like, we don't know. It might not be a quarterly submission option. But the thing is, most partnerships and most LLPs are on software already. So I feel like there's nothing really to worry about at this stage, because you're already using the softwares that if they need you to be compliant in some way, you're basically there already. So I think it's just, as Jack says, get into those good habits of monthly bookkeeping and stuff like that, keeping on top of things rather than waiting to the end of the year, because in case it does come, you're already ready for it, I'd say.
Okay, great. Simon, you put a question in the group, which is
something just occurred to me, and I'm sorry, apologies, because I am a bloody nerd about this stuff, but particularly in the children's services sector, okay, where the predominance of franchisees are self-employed and they're probably hovering around this area. There is an emergence, or a lot of franchisors are operating centralized booking systems where royalties are taken at source. Okay, now is that going to cause some problems? Because what does the franchisee have to report? Is it the gross sales figure or the net sales figure?
Great question. I'll take this one, Lucy. So on that, every client, every franchisee should always be operating and declaring the gross revenue within their accounts, because you have, if anything's held back, whether that's franchise fees, we should be structuring through the accounting software and the accounts at the end of the year, gross turnover less their expenses comes back to what they've actually net received.
Yeah. But I mean, okay, so does that then put the onus on the franchisor that operates that type of system to make these returns on behalf of the franchisee then?
No, so I would say to that, Simon, like it should be every franchisee engaging a professional to help them with their year-end accounts. That should be an absolute standard, that if you are receiving revenue that's got an element that's held back, it should always be grossed up. You know, commonly you get Stripe, Go cardless charges, these types of things that sometimes hold back a fee. We should always be showing 100% of the revenue less the appropriate charge in the P&L than what comes back to what have we actually received.
And that is the same as well if the CIS applies. Just
yeah.
Thank you.
Just to dig on that one a little bit, just if I may, there are a number of brands now that are providing either the net revenue off the platform, so client fee less MSF, but also some that are paying a kind of royalty on the transaction. So the franchisee never sees the whole value of the pound that the client spent. They maybe get 25% of that as their slice of the cake. So that's the franchisee's gross revenue effectively. That's really what this is counting now, isn't it? Yeah. Okay. Can I just ask, where this is heading really? I suppose in my mind there's a gap here. Firstly, there's a gap between 50,000 and 90,000 turnover, where if you were a limited company and you chose a limited route between 50 and 90,000, you wouldn't have all this quarterly work to do, would you? So there's a bit of a gap there. Firstly, is that changing your advice on that you give to people about the structure that they would take in their business? And secondly, do you see the roadmap changing so that gap is going to close? Or, maybe, I'm surprised in some ways that they didn't set the MTD level at the VAT threshold, because it would have put everybody in a simpler place, wouldn't it?
Yeah, around that. So I think our advice around business structures really comes down to that individual and the other sources of income that they may or may not have. Whether that means initially, whether it's sole trade or partnership to help with some profit distributions, if that means limited company for retained earnings. I don't think that this making tax digital element should be a deal breaker when it comes to change of business structure. It really just is kind of having that awareness, making sure that this is being planned for. And a massive thing, certainly kind of going back to another element, which is often a surprise to the self-employed sole traders, is that payment on account. When that first tax bill exceeds £1,000 and a payment on account is required at January and within July, whilst it's not set in stone yet, very much feel the kind of the way this is all shifting. They will potentially roll it out to all business structures, but certainly longer term planning. HMRC are smart. This is just the initial, get you submitting the information quarterly. But I very much believe that in a good few years' time, this will be kind of reporting and paying the tax that you've earned within that period every quarter.
Right.
Which in a way, kind of for us, brilliant, because you are paying tax based on what you've earned in that period. The negative, staying on top of your numbers, you haven't got a choice, otherwise you start getting penalised. However, it will then longer term wipe out this payment on account, which is a massive challenge to some small businesses that haven't planned ahead or didn't necessarily have that knowledge, because they've gone, I don't need to pay an accountant. I don't have to file my accounts at company's house. I'm going to do it myself.
Caused a few people out, 18 months into their business life, hasn't it? But they are not paying tax. What do you think? I mean, I think it's interesting, and I suppose I was thinking along the same lines that ultimately we're going to be paying tax on demand. So it kind of suggests that we need to be more accurate in terms of putting not just our turnover or sales value, but also our expenses into here, and not leaving that to an end year adjustment. So starting to almost depreciate things on a quarterly basis, apportion costs on a quarterly basis. What are the pitfalls? What do you think is the unwritten agenda here, and what should we be thinking about? What are HMAs? What is the game here?
I think the game is, like anything, enforcing. Initially, this making tax digital was brought in for VAT registered businesses. Now you're starting to see it kind of filter downwards. The HMRC agenda, I'm biased. I would say it's tripping up a small business owner that they're in their business working hard to earn a living, and they're not making their quarterly submissions because they, one, didn't have the knowledge or haven't engaged a professional to do that for them. What happens from that? Penalties, late filing, surcharges, all the rest of it. So I'm extremely biased and I get excited about these things. I believe everyone that has a business that is invested in a franchise should be having quarterly management accounts, should be having that quarterly check-in review and really seeing a full 3-month set of financials. Obviously, there's a cost versus where am I at right now. Some people see that as an expense. We see that as you're investing back in your business and it reduces your tax bill at the end of the year. As a kind of best practice for franchisors, we want to get into the good habits that we don't want this to be the reason why their business isn't here in a couple of years' time. This is such a small fundamental part of running a business. If you don't want to do it, make sure you've got someone that will help you along your journey, because knowing your numbers, talking through them and having that regular communication is absolutely essential. And I think kind of certainly in the accountancy world, there's every client wants proactive, hands-on, driven support across the year. No one wants to go down the management account service. So there's a real big kind of proactive versus compliance only. This quarterly check-in, it will help and only focus that business owner. They need to be looking at their numbers, drive those conversations back to your kind of accountant portfolio manager, and make sure you're just investing the time for tax efficiencies and maximizing whatever you can out of the business.
And Jack, in terms of, you mentioned the 7th of August deadline, so we've got 4 months. Have you seen any examples of good practice within, the franchise network, specific franchisors, without naming brands, of franchisors who are really, if you like, driving this, stroke supporting. Because I think it's easy for franchisors to sit back and think, oh, well, actually, it doesn't relate to me because I'm not a sole trader. But actually, if you've got a network and you've got half sole traders and they're not doing it properly, it is going to relate to you at some point in time.
Yeah, so we definitely have some brands that it's within their agreements that they expect up-to-date numbers by the 7th or the 10th of every single month. Obviously, from a MSF calculation perspective, not everyone's got kind of the fancy CRM systems that will calculate that, and they very much kind of, if it isn't done and up to date on time, they enforce a penalty structure within their networks. Depends how harsh you want to be when it comes to that side of things. But very much kind of, for me, working closely with a franchisor, it's setting those expectations. Well, some make sure they've got access to accounting softwares, those types of things. Others kind of hold back and aren't as interested in that. But I think kind of really starting to at least have quarterly reviews in line with this is absolutely essential for best practice and to stay on top of everything.
Okay. And then again, for the people who are on the call, potentially the people who will be watching the recording, one of the drums that we've been beating for a reasonable period of time is ideally the franchisor having a nominated firm of accountants that all franchisees work with, and a nominated firm of accountants who understand franchising, so that again, the franchisor only has to deal with, in effect, one individual, one organisation. That message can be spread throughout the network, basically. So this would very much support that message and that argument.
Sorry, there's a wider point here again that's just sprung to mind. This is almost what you're doing through this is you're getting every it's a registration process for self-employed individuals, isn't it? Which we've never had before in this country. You're basically, what you're doing now is you're asking anybody that's self-employed to almost formally register as if you were on Companies House. I think that's quite significant as well, isn't it? Because you could set yourself up as a self-employed person and go under the radar apart from your self-assessment. But now we are formally recognising and registering self-employed people in the UK.
Yeah, I mean, I guess it's a more detailed form of self-assessment because those people had to do it once a year or get the professionals to do once a year. But again, Jack, have you seen any move towards franchisors, having nominated accountants? Obviously, you work with the large number of brands, but it's something that we've supported for a long time.
Yeah, absolutely. I would say probably within the last 2 or 3 years, I think there's been a gradual increase in franchise really getting behind that message and that kind of structure. Obviously, for us, how we structure, we have one accountant looks after a network. So that consistency, the clear communication pathway and everything like that is really important. It allows then you to kind of scale and bring in and support a significant sized network and know that there's a clear structure all in one place. I think the other side to it as well is that kind of knowing that someone is there to support as and when, and not having that kind of transactional piece on that time on those time charge and time rates. And in the franchising industry, that is it's big because people like to be able to budget. They like to be able to budget for their marketing, budget for their accountants across the year, and just know that things aren't going to get ridiculous.
Yeah, and know they're getting good advice. Kat,
yeah,
bring you in.
Just thought I would just come up with a rather boring point, but has to be said, is if franchisors do decide along the line that they want their franchisees to be limited companies and not sole traders, they will have to have a variation on the franchise agreement, because obviously the parties will be different and there won't be a guarantee of the shareholders of the limited company. So that would just need to be done as well, if they do decide to do that. Just thought I'd raise another little
no great
joyous bit of news.
It's an entirely different legal entity, isn't it? So it needs a new franchise agreement or a refresh or whatever.
Yeah, so it may well be that if it's a franchisor that only has sole traders, their franchise agreement may be written purely for sole traders, or it might be they've got a franchise agreement that can work for either, and it just has an amendment made to it depending. But ultimately, there will need to be either a variation to the franchise agreement or a new franchise agreement issued if the parties change, and because the guarantee has to come into play as well.
Yeah, otherwise you'd have a franchise agreement with a legal entity that no longer trades, or just trading.
Yeah, that's right. Yeah,
which wouldn't be great.
Yeah.
Simon?
Just a quick one. Apologies if I've missed this, but what physical information are you transmitting every quarter? Is it just top line sales figures? Is that all they're interested in?
Yeah, so it'll be so on a category basis, you'll have potentially you might have sales down as sales, and then you've got other revenue, maybe you've got interest income, those they're the top levels.
Right.
And then your expenses are then those other wrappers. So for example, we've got motor expenses, accounting, law, legal expenses, subsistence, all those extra little bits. So yeah, there's as part of your chart of accounts within your accounting software, they're basically the categories that will be used to wrap it up and send it to HMRC rather than transactional basis.
And again, correct me if I'm wrong, Lucy. Lucy's, in addition to the recording today, Lucy sent some of the recordings, which is a kind of probably longer version of the presentation, which again can be shared with everyone on the call, with all the franchisors. And I guess if anyone wants to share that with their franchisees, they're willing, happy, able to do that to get the franchisees scared to death and on board in terms of what needs to be done, basically.
Yeah, 100%. Yeah, so we've got a 30-minute webinar saved as well, and then we've got a 5-minute take on it as well, because I appreciate people might not want to sit through half an hour. So yes, we've got those two, and then the pack that we've shared today through the call. There's a couple of extra slides in there, so some Q&A sections as well that are available for everyone to share with their franchisees. Yeah, 100%.
Yeah,
Sorry,
we'll make all
just
that
a
available.
point of clarification. Is it also true for a partnership? And does the partnership have 50,000 income each? So a partnership that's operating a franchise?
Well, partnerships are not qualifying income in this instance. No, it's just self-employed.
All right, okay. So that's a nice,
for now.
Let's call it a loophole.
Well, if you're a sole
get a
trader,
partner in your business, and you can start. You don't have to do MTD.
If you're a sole trader, find a partner ASAP, basically.
Yeah.
To bring to the business. So, okay. Scott, do you have any questions, comments, views in terms of what's happening in the Cat Butler?
I honestly, between thinking about myself selfishly as a sole trader and the franchisees being mostly sole traders and limited, I think my head's just given in. I'm sitting with the two heads on, thinking about myself going forward and this going forward. I think the one bit I've probably just been thinking about much, and I don't know if I missed something. But say, for example, a sole trader over 50k, they do their quarterly return. Do they then do their tax at that point, or is the tax at the year end? I think I'm not understanding when the tax bit falls in.
So you do the submission on a quarterly basis, and then you won't pay your tax until January as normal. But yeah, you've got the self-assessment tax return that is now rebranded as a final declaration. So that is still within the January deadline. So technically, you could do it at any point after you've submitted quarter four. And then you've got until January, so January 28th to get
Interesting. That's actually bringing that final declaration forward 12 months, isn't it? Effectively.
Yeah.
Or 9 months.
It's the tax timeline is the same. It's not like I can make a lot of profit one quarter, invest in something the next, and pay no tax, lots of tax, and end up all over the place from a cash flow perspective as a sole trader. That's all the same in terms of when the tax piece gets paid.
Yes. So that's absolutely fine to continue like that structure.
Yeah. Cool.
Okay. Sarah, you've got a hand, and then Kat. Sorry, I didn't realise Kat, your hand was still raised. So Sarah first, then come to Kat.
Yeah, so I know some of our franchisees have unusual year ends for various reasons. So let's say their year end is the 31st of October. How does that slot in with the quarterly reporting?
So sorry, why do they have 30? So self-assessments are till 31st of March or the 5th or 6th of April. So how does the 31st of October fall into it?
Well, they've got a nominated year end of the 31st of October, which is the basis on which they produce their accounts with their bookkeeper.
Probably because they started on the 1st of November historically.
Yeah.
As a sole trader. Okay, so basically it will still be exactly the same for everyone. The default is the 6th of April, so they will have to do the quarterlies as per the tax year.
Okay, thank you.
Can I just jump in there as well, Sarah? So my question would be, if you're running kind of a sole trade self-employed business, why would we be reporting from, say, October to September for a year end when it runs in line with the tax year? For us, we like all clients, it being 31st of March or 5th of April year end, it's in line with the tax year because they distribute and pay tax on their profits at the end of the year. So it runs really nicely in line with each other. Obviously, when some others do have different year ends outside of the tax year, that's typically sometimes what we'd expect to see from limited company structures, because when they incorporate, they kind of get a year end straight from there and may not want to change it. Same with our LLPs, but certainly with all our LLP structured businesses, due to some change a couple of years ago around overlap profits, we also make sure that runs in line with the tax year as well, because again, very similar to sole trade general partnership, they all pay tax on their profits at the end of the financial year via partnership tax return distributions and then self-assessment.
Okay, thanks.
That's okay.
Pat?
I thought a bit of nice news about all of this. So let's say you're doing really lovely and well as your sole trader, and your turnover is 80,000 and you make a profit of 70,000. So you're way over the 50,000 limit. But the following year, you say your franchisee, your franchise agreement ends and you sell the business and you in effect retire because you wind it down or whatever, because your submissions are quarterly and you're submitting them quarterly. When you come to do when you're paying money on account, because HMRC will know about it in advance. I mean, I don't know if this is true, but you may well then not have to pay so much money on account because HMRC already know that your income has dropped massively. Whereas I think normally if you were doing that, you have to say to them, my income has dropped, and you kind of hope they believe you. Whereas this way, they know your income has dropped, and therefore you don't have to pay so much on account, or you don't have to kind of jump through hoops to say, honestly, my income has dropped, I don't want to pay so much on account. I think Jack was nodding at me there, so I think I'm saying something sensible.
Yeah, no. So I'm just playing it back. I'm just playing it back in my head. They're not very flexible around you wanting to reduce your payments on account. And if it does deem that isn't the case, then they do like to penalise you for that incorrect payment on account. But ultimately, kind of as we start to go through this and start to see the change, these are all the types of things. I think end goal is going to be paying tax. But very much kind of what we see from, the VAT return, the whole VAT return submission changed. We could log in and just put in our box 1 to 9. Then all of a sudden starting to tie it up with the accounting software, everything feeding through. This is just a very similar structure, and we will see lots of developments over the next couple of years around this.
Big brother. Anna, I know you come on the thing, so Anna.
Hi.
Hi.
It's just occurred to me at the switchover point, when people are moving into that bracket of the 50k per year, when they have to, exactly at what point do they have to register?
So if you had 50,000 on your self-employed self-assessment from 24-25, so the last year that was submitted, officially you have to register for this April. And again, officially, as long as you are registered ahead of the submission deadline, at the moment they don't suggest that you have to register any sooner than that.
So it's not like that with it's not the rolling 12 months. It is done on the last full tax year.
Yes. Yeah.
So you could be at 49 and you wouldn't have to do anything, and then you could have a brilliant year, but you wouldn't have to do anything for another 12 months.
Yes, that's correct. Yeah.
Okay, that's quite, I suppose that's a bit better than the VAT model.
And I guess as people are
Thank you.
submitting their accounts, if they come into that bracket, they'll get some notification that says, congratulations, you've now moved into submitting, you know, tax digital. You can do it quarterly now, moving forward, basically, which will be a lovely surprise.
Well, I think, Lucy, is it right that everyone's getting letters? So, like, whether you kind of at this stage, whether you qualify or not, everyone's getting hit with a letter. So everyone's going, does this relate to me now or not? And we've both had conversations where we're kind of going through it, and it turns out that actually, no, you've just been given the letter, so you will be next year, but not right now, kind of thing.
Right. Okay. Great. Well, as we're moving towards the end of the session, got to thank Jack and Lucy. Chris has just left, but said thanks to everyone, especially Jack and Lucy, in terms of the session today, which has been really useful. For the people who are left, because I know a couple of people have dipped out, if you could get your mobile phones out, scan the QR code to leave feedback on today's session, and you will be sent a recording of the session and the other attachments that Lucy's provided us with the next week when it's edited and it's ready, basically. And again, we're using our SuperGather survey system to do this. So anyone that wants anything in addition to that will get it. And the final reminder is that the next first Friday in May is going back to the old chestnut, the regular chestnut, the popular theme of franchise recruitment, and we're looking at franchise recruitment in 2026, what's hot and what's not, which is always a good topic to get people involved in. So thank you to everyone for coming today. It's Friday, the sun's shining, we've got the weekend coming up, and have a good one.